If your mortgage is coming up for renewal and you're just planning to sign whatever your bank sends you, hold on a second. Now, that decision could cost you or save you tens of thousands of dollars. So, today, I want to break down what a mortgage renewal actually looks like, how to negotiate for a better rate and terms, and I'll walk you through a real world example so that you know exactly what to expect. Let's start with the basics. A mortgage renewal happens when your current mortgage term ends, and this is usually after 3 to 5 years, but you still owe money on the loan. So at renewal, you're going to choose between a new interest rate, a new term length, whether you're going to go fixed or variable, and sometimes you'll have new conditions or restrictions. But here's the key that most homeowners miss. You're not required to stick with your current lender because the bank's renewal letter is just an offer, but it's not a rule. And here's how the renewal process actually works behind the scenes. At about 120 to 180 days before your maturity, your lender sends you a renewal letter. Usually includes a rate, but rarely it's going to be the best one. Before you accept anything, make sure that you check what your remaining balance is, your current interest rate, whether there are prepayment privileges, and any penalties or restrictions. There you have two options. You can either negotiate with your current lender or shop around the market with a mortgage broker or by discussing directly to other lenders. And often you can go back and forth to your current lender to try and match what's being offered or beat what is being offered for you. So how do you negotiate for better mortgage renewal terms? Now, this is where people leave money on the table. Step one, never just accept the first offer. Banks expect you to negotiate, so the first rate is almost always higher than what they are willing to give you. Step two, check the market rates. Even if you love your bank, you need to have leverage. That means knowing what other lenders, credit unions, monoline lenders are offering right now, so you have a baseline. Step three, negotiate more than just the rate. The rate matters, but terms matter just as much. Make sure you look at prepayment privileges, portability if you decide to move, penalties for breaking early, and whether you're going to go fixed or variable. Because a slightly higher rate, but with better terms, can actually be cheaper in the long term. If, for instance, you're deciding to sell the house before the term ends, then look at what amount of prepayment privileges that you have that you can pay upfront to pay down the mortgage, but also look at how much it would cost you to end your term early, which is typically the greater of 3 months interest or interest rate differential. But remember, always read the terms of your mortgage agreement before you sign anything. Step four, use timing to your advantage. You can usually lock in a rate 120 days before renewals and still keep shopping around because you're not committing until the renewal date. So let me give you the real world mortgage example that I wanted to discuss. So you have an original purchase price of about $800,000, and now you have a mortgage remaining at about $520,000. If your current lender offers 5.59% fixed 5-year, generally what most people will do, they're just going to sign it and be done with it. But here's what a smart renewal will look like. The homeowner will shop around. They will find alternative lenders who are offering 5.19% fixed with better prepayment terms. The current lender will now match the rate after having the negotiation. And as a result, you're going to have a monthly savings of about $120 per month, which over the course of 5 years ends up being $7,000 that you save. See? Big difference. Plus, you're going to have better flexibility if they decide to sell early because of the better terms that you receive. All this has happened because of conversations and having negotiations. So to summarize, these are the common mistakes you want to avoid: signing the renewal letter immediately, focusing only on the rate and not penalties, waiting until the last minute, and assuming that your loyalty equals better pricing. Banks reward informed borrowers, not passive ones. So if your mortgage is renewing in the next 6 to 12 months, now is the time to start planning, not a month before. If this video helped you, please like, subscribe, and share this with someone whose renewal is coming up. And if you want help planning your next move, feel free to reach out and I'd be glad to help you. Remember, smart decisions at renewal can make a massive difference long term. Until then, talk to you guys next time. Cheers.